and center this hour, rally and risk. The market's mixed signals today. What that means for stocks and your money, we discussed that with the investment committee. Joining me for the hour, Jason Snipe, Shannon Sakosha, Josh Brown here with me post-9 is Stephanie Link. Let's check the markets as we always do to kick things off. Today on this Tuesday, we are green. It's election day. You got the Dow good for better than 500. S&P's up 1.25. NASDAQ almost 1.5. And 414 is the 10-year note. So, Steph, I mentioned sort of these mixed signals. You got, the dollar and yields are lower. Stocks may be getting a lift off that. Expectations are the midterms. Energy, healthcare leading. That can be played a little bit defensive. Tesla below $200 or right around there. That's a bit of sentiment on where risk is. And then this whole Bitcoin thing stuck around 20K, was below 20K earlier. Another sort of sign of or assessment of where risk is?
Well, I think we're starting to price in a split Congress, right, tonight. And that actually is good for the markets. As investors, we root for that because that's gridlock. And we don't want to have to worry about what the government is going to do. And maybe perhaps a split Congress means a little less fiscal stimulus, which means maybe a little less inflation. However, you mentioned
how is there going to be any more fiscal stimulus anyway?
Right. Well, who knows? But my point is a split Congress
I think
gets you
everybody knows.
Well, but I think we're pricing in some of that to a degree. You mentioned the dollar, though, so there's mixed signals on the dollar. A weak dollar is very good for corporate multinational company earnings. That was the #1 questions that were asked on conference calls during earnings season. That and input costs and pricing power and that kind of thing. On the other hand, a weak dollar gives fuel to the commodity price inflation story. And in the last month, oil's up 21%, natural gas is up 42%. So there you go. You might have kind of these mixed signals on where inflation is going. And I think that right now we're giving the benefit of the doubt that maybe the fiscal is less, inflation might be less, the Fed might be less. I don't buy it at all because I think of the job market and how hot and how tight it is.
Right.
And we got across the board last week between JOLT and ADP and initial claims, even non-farm payroll numbers. Jobs are plentiful, right? And so that is because of that, the Fed has got to go after inflation, and they're going to remain hawkish for longer. And so I don't think the narrative changes. I like the rally today. I like the rally in the last couple of days, but I also don't buy in that things have changed all that much.
So then, is that how you see it too, Josh? That the environment for risk, if you want to put it that way, isn't any better once we get past the midterms, and let's not forget the CPI as well on Thursday, that we're going to go just back to reality of what's right in front of us. And that's going to guide where this market goes more than anything else.
Yeah, so the gridlock rally and the people celebrating the gridlock thing, the whole thing is a little bit of a clown show. Single variable analysis never wins. If you think about where, they show you this is how the S&P 500 does during gridlock, blah, blah, blah. And the numbers that are heavily influencing that are the Clinton years, which is 1994. We had gridlock start into 2000. And then they'll look at the Obama years and they'll say let's say 2010 when the Republicans took over. The reality is, first of all, Clinton and the Republican-controlled Congress got a lot done together. That's number one. Number two, inflation was sub 3% during the Clinton years and sub 2% during the Obama years. We're at 8%. We don't have that same backdrop. So I don't think that those stats are relevant. I don't think that history is particularly meaningful. And I don't think people should buy or sell elements of a portfolio based on who they think is going to win the House or the Senate. So if that's your whole reason for being bulled up, yay, we get gridlock, I don't really know what to tell you. It's just not, in my view, a sensible way to go about investing.
No, I mean.